the Bloomberg forecast right now for inflation in the US is 8% for this year, the UK 9%. We see in Sweden 7.6%, South Africa 6.8%, and many of the emerging markets in double digits. So I first wanted to ask you both, what is your near and medium term outlook, and where is it stickiest for inflation? Nina, do you want to start?
Yeah. Sure. I think in terms of sort of, broadly summarizing, sort of if we look at inflation in the US, in the UK, in the Eurozone, we are expecting sort of a near-term peak to come pretty soon in the next couple of months, and then for inflation to start gradually ticking down. But I think what's been a really interesting feature of our forecasts is that we're not expecting any of those sort of developed markets to see inflation back at their 2% target for quite a number of years. It's not really a question of months. Sort of looking into the late 2020s, we're still seeing inflation at, close to twice that 2% target. And I mean, there's a number of reasons for that. Even, some people are sort of looking at the energy crisis and saying, well, once that's out of the figures, then isn't inflation just going to go back down to that 2% target? And our view is, no, not really. If wages are sticky, there are sort of slightly different things happening in emerging markets in terms of access to less expensive labor and other inputs into supply chains. So I think there's a entire host of reasons to think inflation is going to be elevated for the foreseeable future in our view.
Yeah, I completely agree, actually. And I guess we are in a really unique period of time. We have just been through a pandemic, and now we have a war in the middle of Europe. So it's easy to think that there might be some cyclical elements which are dominant here, but I agree with you, Nina, that that's not the case. I mean, of course, throughout the pandemic, we've seen savings, spending patterns change. We obviously had massive shocks to commodity prices after the Russia-Ukraine conflict, but those impacts have already reached inflation, and that's why headline inflation is in double-digit levels, even in Europe. But we are seeing that now stabilize. But what is worrying is we are actually still seeing the underlying inflation pressures accelerate in core inflation. And as you have mentioned, this is not cyclical inflation, this is structural inflation pressures, and we are seeing a change from globalization into deglobalization. We are having discussions on how to have resilient supply chains. We are transitioning into green energy sources, and these will all have inflationary impacts going forward. So I completely agree. It's hard to see inflation levels stabilize at central banks' 2% targets while these structural changes are taking place.
Do you see any of the emerging market countries doing policies that perhaps are smart examples at this point for tackling inflation?
I think on the commodity side, of course, there was a difference for countries which are energy producers, which will be impacted less. But for example, looking at Europe, we have seen how our energy sources were actually not diversified, and how dependent, especially the manufacturing sector, was on the gas flow coming from Russia. So. But that's why we are seeing policy measures put in place in Europe. The Repower EU plan is incentivizing green investments. In US, we have seen the Inflation Reduction Act, which again incentivizes green investments. So there are measures being put in place, but I'm afraid with the high commodity prices, it did hurt emerging markets and developed markets.
I think in terms of immediate sort of policies that are going to have an immediate impact, Latin America is a good example of sort of somebody who didn't really get monetary policy differently than in the US and in Europe, but they started doing it a good year ahead of a lot of other bigger central banks. And some people say, well, they just got lucky on the timing. But I mean, what's luck and what's just a good decision. But I think, again, that's something that's on the very sort of, immediate side. And then Semin has said, I think in terms of the longer term, I think both developed and emerging markets are sort of in a similar boat in terms of facing upward price pressures.
I guess the one difference is obviously in developed markets, there's much bigger fiscal policy space, which can be put to work to support the consumers, to support industries. In emerging markets, that fiscal space is much smaller. So it's harder to offset the impact by introducing energy price caps or fiscal supports.
We actually already have some questions here, so I hate to not take advantage of that. Do you expect corporate earnings to shrink or continue to expand in the face of stubborn inflation? And how can the two coexist? Any thoughts there?
I guess as part of the deglobalization discussion we were having, so probably it's a good place to start with globalization. So during the last kind of 40 years, we were seeing the cheaper emerging market labor force integrate itself to developed market labor force. And kind of we've seen manufacturing jobs move to China. We've seen Eastern European impact, lower production costs in Germany. So, and this was a really difficult period for the workers to push for higher compensation. So on the corporate profit side, we've already seen a major shift from the labor income to corporate profits. So I guess as we are seeing a bit of a reversal now with deglobalization, we are actually already seeing super tight labor markets in the US, in Europe, and as we are discussing more of the reshoring of production facilities to developed markets, that market's going to tighten even more. We are expecting labor costs to increase, and obviously that will be negative for corporate profits.
I just want to turn to the UK for a second. There's lots of ways that we can talk about the UK, but there was an interesting quote that we had yesterday after the reversal of the tax cut policies, and the quote was, "This will be a hammer blow for many who were already worried how they will survive." That came from the Director General of the British Chambers of Commerce. What is your reaction to that?
It's obviously been a trying time in the UK. I think the one worry at the moment is that sort of it's hard to sort of agree or disagree with the direction of government's fiscal policy because there's a lack of clarity of what's actually happening. So, you know, we had the mini budget. Now 90% of that has been clawed back. I still think that the energy price cap, even though it's going to be reviewed in the more short term than initially anticipated, is going to help quite a lot of people. But then on the other hand, some policies that were labeled as helping only, you know, the wealthiest in society were actually, you know, for example, you've just mentioned the reversal of the base rate of income taxation. We're actually going to have a wider impact. So I'm going to be very curious to see what's coming from the new chancellor in the coming weeks. But I think one problem is now that any sort of expansionary policy and any sort of fiscal looseness has sort of been made radioactive by the reaction of the markets and the political turmoil. So I suspect there will be a lot more reluctance to act in that direction. So I wouldn't be surprised if some people face more hardship than they would have otherwise.
I would probably add, I mean, on the policy design side, probably the best way to tackle the issue would be to introduce measures in a means-tested way, which would actually support the most vulnerable in the society against energy price increases, while also introducing the message that we should be focusing on energy conservation, because we have very little. I mean, we have filled our storage in Europe to a large extent, but especially after the sabotage on the Nord Stream gas pipes, we are not actually able to add to those storage levels. So we have to make it clear that we should be all focused on conserving energy, because otherwise what we will end up will be blackouts or most likely even sharper slowdown on the growth side if we are forcing manufacturers to actually cut production because we don't have enough energy to supply for them. So probably there should be a dual message here.
I want to go to our polling question now, just because I think we're very curious to see how the audience reacts to this. Do you believe the next generation will be better off than yourselves? Very simple, yes or no? Let's give it a second. Okay. I think there's a pretty steady no there. So let's talk about the intergenerational wealth gap and just sort of how do you maintain social cohesion and fight inflation simultaneously? What are some of the policy suggestions there?
I think our recent experience after the global financial crisis tells us that when the reaction to tackle was by austerity measures, then we practically had a lost decade, and it was particularly harder for the younger generations with the youth unemployment levels increasing and staying high for a long period of time. And we have seen how that actually created resentment and how it has polarized the political scene so that extreme right-wing and extreme left-wing parties would actually join the mainstream. And I think now I would say probably the focus needs to shift from maximizing shareholder profits to bringing communities and supporting individuals and making sure that everybody has access to social mobility, to certain level of free education, free healthcare, minimum wage, unemployment benefits, pensions, so that we can actually serve the whole of the society. And again, I think when we look at the younger generation, our generation thinks, okay, we have our full-time jobs, we have our pensions, we have our benefits, but actually that's not necessarily the experience of the younger generation. I mean, we have a two-tier labor market at the moment, and for new joiners, a lot of them end up with zero-hour contracts, part-time jobs. They don't necessarily have pensions or unemployment benefits. So there's a significant difference. So I think we need to tackle going forward to have better social cohesion and to bring the rest of society rather than focusing on it.
And it's interesting coming from an inflation trader saying that. Okay, Nina, what are your thoughts on that?
I think there isn't going to be a single sort of, silver bullet solution to tackling inequality. If I had to pick out sort of three areas that I think are of particular importance, one is access to high quality and free education. So, making sure that schools that are free to attend sort of across the countries, both sort of in urban, rural areas, are of the highest quality, and that there isn't sort of, because I think once you sort of get to that point of unequal education access or quality of education access, it's very hard to catch up later on. I think another area of focus is in terms of taxation. Most of the developed world is focusing very heavily on taxing income. And over a longer term, I think a shift towards what's a better method of taxation that focuses on wealth. In a lot of countries, I think some reform around inheritance taxation is in the longer term going to be beneficial for inequality. And something that I think has become more relevant since the pandemic is I think there has been a little bit of a decoupling in terms of sort of access to jobs and your physical location with more flexible working. And I think there is some potential there for people who couldn't perhaps afford to preemptively move to very expensive urban areas and take what are usually the highest paying jobs, are going to have a little bit of an easier entry. And I think that's something that's important not to lose out on and to continue to nurturing even as sort of things normalize post-COVID.
And can I, one
last word,
thing?
yes, thank you.
I think a game changer would be for the governments to provide free or subsidized childcare and elderly care, because that would create such a massive improvement in female participation, because this burden of unpaid work mostly falls on women. And as we are discussing how we can improve productivity, how we can support growth outlook, I mean, this is something which can be quite easily tackled and actually improve the equality between women and men, and the same for shared parental leave, which would again leave the stigma.
And if the government can do this before my due date in February, it would be especially helpful in this country. Yeah.
Thank you so much.